Hello, guys, and welcome to another post market analysis of Bank Nifty. Today is December 7th, and this is the Bank Nifty's chart on a 5 minute time frame. So, before we start dissecting the Bank Nifty's chart on a 5 minute time frame and see what we can learn from today's price action of Bank Nifty, let's start as usual from our daily chart. And before we do that, I request you to please subscribe if you have not subscribed yet. This is where we do a post market analysis and pre market analysis and learn from the live markets and the post market analysis markets on the price action, especially on Bank Nifty and Nifty charts. Okay, now uh, let's plot our daily chart of Bank Nifty. All right. So for those of you who have seen on our pre-market analysis video today and the post-market analysis video yesterday, we have clearly said that Bank Nifty is, even though it is in an up move, it is in a fantastic rally and it is performing extremely well on the upper side of 47,000 levels. But this is December 5th is when it started showing some signs of weakness. So this is December 5th candle. So each candle here represents the entire day's price action. So here on this day we said that it has formed a spinning top, so we may see some correction, and that is what has happened yesterday. So yesterday, after seeing this much of a range in the Bank Nifty, and after closing it has given us in turn, so these two candles put together has given us a bearish engulfing pattern. So here, after seeing this bearish engulfing pattern, we were skeptical about the Bank Nifty performance because we are seeing this very strong bearish signal at an all-time high. Okay, so in even today's pre-market analysis video, we have asked you to be bullish only if you see a proper breakout and a proper retracement after this level, but that didn't happen. And coming towards the downside, we have drawn this support area and this resistance area, and also this area. We'll go back and see what uh, these regions are on a intraday chart, but we have drawn these areas before to just make sure that these levels are going to play important role in stopping the Bank Nifty, or at least giving support or resistance levels in the Bank Nifty. And we have to be careful with these areas. That is what we have given a caution in today's pre-market analysis video and even in yesterday's post-market analysis video. So that is what has happened in the Bank Nifty today. If you notice, this is the price range of the Bank Nifty candle, and we have seen a pretty good movement towards the downside, and it has strongly reacted and started pulling towards the upside. But in either cases, it has respected this level what we have drawn earlier, and it is currently given as a close which is almost at the same level, like the yesterday's market. So we have seen a total movement of almost around 108 points in the Bank Nifty from opening to the close. Even though we have seen a peak high and low in the Bank Nifty, we have the real body of the Bank Nifty is really small, that is of 108 points only. So before we get into the Nifty chart, let's check what yeah, this is the Nifty chart. So here we have an indication. Yesterday we have mentioned that this is a hanging man candle formation. So in order to take this into consideration, you need to see a confirmation candle after that, which should be a bearish candle. And also we said that it should see a close below the close of this level. Only then we can take a confirmation, and that has been received today with this candle. So both Nifty and Bank Nifty, even though yesterday Nifty has seen a bearish a candlestick pattern, it is today that Nifty has received some sort of confirmation. By the time Nifty has received some sort of bearish confirmation towards the downside, Bank Nifty has again given us a positive, a green candle on a daily time frame. But in both Bank Nifty and Nifty, we have all these levels marked. Okay, we have all these levels marked. So you should be careful if the market is coming down at all these levels. And in order again to be bullish on the Nifty or Bank Nifty, here in Nifty, you should see a close above this 20,950 levels. All right. So before before we okay, so sorry for that. Okay, so before we again come back into the bullish mode, you need to be very careful with this level, because right now this 20,950 level is the all-time high, and also this is going to act as resistance for the Nifty. While if it is if it has to go back and then continue its rally. And now let's come back to Bank Nifty and let's see what we can learn from our intraday's chart in the Bank Nifty. So yes, this is this is the Bank Nifty's chart on a 5 minute time frame, and then this is the entire day's price action of Bank Nifty. So we have this all these levels marked in our pre-market analysis, and also we have these levels marked from yesterday post-market analysis video. So now all I'm doing is just dragging them towards the right so that it covers the today's price range as well. Okay, so this is the last level. All right, that's it. So now we have a predefined resistance, support, whatever levels that we have here. Okay, so to start with, Bank Nifty has seen an opening right at this level of 46,760 approximately, and then immediately shown us the signs of weakness towards the downside. And the initial three candles are bearish candles, but the last candle, it has seen some sort of interest towards moving the upside at 9:25. But at 9:25 you may take this as, see, this is a breakout and this is a confirmation candle. Now you can think that you could have taken a trade there towards reaching keeping this as your target level. But yeah, I'll tell you why that shouldn't be the case, is because your risk versus reward ratio is not that great. If you're entering there and if you're keeping your target at 46,390, your risk would have been above this, which is very huge. Okay, your risk versus reward ratio is not even one here, so that is why that is not an ideal location to get into a trade. So all you have to do is wait for another uh, candlestick pattern at an important location, which happened at 940 and 935. See, 935 and 940 candles both together forming a bearish engulfing pattern again. But here you would have taken a trade towards the downside and then keeping this as your target, because that was your latest swing reaction on the left, and that is your stop loss. And even in this case you have a risk versus reward ratio which is less than 1, so even that was not a good trade. So next, where was the option? Here is an option where you have seen a breakout towards the upside with a proper confirmation candle getting closed above that. But again, here your risk would have been below this or below that. For the target levels of this, again, no proper risk versus reward ratio. So where is the next location is 11:30 is 11:30 is, excuse me. Okay, so 11:30 candle is giving us a hint that the Bank Nifty may see uh, some bullish momentum, because this is a harami pattern. Sorry, uh, this is a piercing pattern, a variant of the piercing pattern, which is coming at a very important location. And here we have a target level. See, now this is going to be crucial, because some of you may have taken this as your stop loss and then just below this line and this as your target. For those people, it would have given them a good profit of 84 points on the Bank Nifty. But for those who have who are not so confident, who are not so aggressive on their trades, would have taken this as their stop loss. And then in this case, your risk versus reward ratio is not great, so even there we don't have enough. Even there we don't have a good trade entry. So at around 110, you know that this is a swing high, and our Bank Nifty didn't cross this level. So what you could have done is you could have marked this as your resistance level, and exactly at 130 we have seen a breakout of that resistance level, and then immediately you have seen an inside candle formation, that is a harami candle formation also. And you have seen that that is a failure breakout towards the top. So here you would have taken a trade, because here your risk would have been just above this handles high, and your reward would have been, okay, this low, okay, or even this low. So in both the cases you have a risk versus reward ratio of more than 1. So this trade worked. So this would have been your first initial trade if you're not very aggressive trader. So in this case we have seen a Bank Nifty momentum of 48 points. So let's just write it down there. So 48 points of Bank Nifty there. Okay, and then again, if you really wait for, so okay, this right there is again giving us an opportunity to enter towards the put side, because this is again a a bearish engulfing pattern. So with a proper risk versus reward ratio, we know that it has a proper risk versus reward ratio. With that as your risk and this as your profit, no, it's not. You see, risk versus reward ratio, your risk is 1 and reward is only 0.58, so it's not very good location. But those who are willing to sacrifice their profit or put their profit at risk that they have gained from this trade would have taken this trade and made some quick 25 points in the bank nifty. But that's it for the bank nifty. After 240 there was really no big momentum, and there is no point of trading after 240 as well. So that's it on the bank nifty. Hope you have observe the key levels and know. Again, this is a chance for us to realize how important is risk versus reward ratio while picking a trade. Otherwise you would have seen a stop loss here, you would have seen a stop loss here, you would have seen a stop loss here. Okay, so always always pay importance to three key points whenever you trade in the live markets. That is the location that where you pick the trade, and the presence of the candlestick pattern, and the third thing, which is last but not least definitely, is your risk versus reward ratio. So in bank nifty today, on an overall day, we have seen 48 points, which is not bad. Even if there is no trade, even that's fine. But uh, yesterday was a very good day. We have seen around 750 odd points in yesterday's bank nifty momentum, even though there was a sideways market yesterday. So if you want to check that, you can go to our post market analysis charts and check our December 6th post market analysis video. If you want, I can leave that video towards the end of this video. Now let's go back to Nifty and see what Nifty has left us to learn and see. Let's realize, let's see what we can learn from a Nifty's chart. So all these levels are marked before the market opening itself, and then you can see the Nifty has opened at 20,940 level, but the initial candle itself is very huge. So whenever you see a candle of this big in Nifty or Bank Nifty, yeah, traditionally it has to be a sideways market, and that is what has been today. Here we have an important support level coming from yesterday, and that is a place exactly where we have the bullish engulfing pattern. But here we don't have a proper risk versus reward ratio, because if you are entering there, your target would have been this and your risk would have been that, so definitely not. But here there was here again there was a dark cloud cover pattern. So if you don't know what a dark cloud cover is, we have dark cloud cover pattern covered in our candlestick pattern series. In that playlist you can find the video, and this is, there is no proper risk versus reward ratio, there is no point in trading taking a trade there, and this is a breakout. But then there is a failed breakout here. So there was no confirmation candle, so we couldn't take that as a trade. Or all right. So okay, so here you have a swing high, there you have a bearish engulfing pattern, here you have a almost bearish engulfing pattern. Okay, again there is no proper risk versus reward ratio, there is a bullish engulfing pattern, but okay, there is no risk versus reward ratio. Okay, according to me that's it. There is no proper trade identified in the Nifty, but it's good sitting back and noticing the markets instead of getting into a trade which is really not meant to be a trade taken and seeing some loss. I hope that's it for today, and I hope you have learned something from our post market analysis of Bank Nifty and Nifty. Please do subscribe for more such valuable and meaningful content on Indian stock markets. Thank you, and see you again in another video.